these moderate investors still understand that they are risking their money, but they are still protected by the government to a limit. And let me explain this. You might have heard of several people speak about investment or even encouraged you to invest. I certainly speak about investment on this very channel. But for some reason, you've not yet gotten around to doing it yet. Not because you don't believe in investment, but there is something that is holding you back. It could be because you are genuinely afraid of losing money, or you don't feel like you have enough technical knowledge to start even investing, or you feel you don't even have enough money to invest. Whatever your reason for not starting to invest, in this video, I reflect on a simple question. What kind of investor are you? And this is an important question for everyone, whether you're already investing or you are yet to begin your investment journey. It is important for you to reflect, what kind of investor am I? Because it helps ensures that the investment choices or decisions that you make reflects your personality, so that you don't feel like you are missing out if other people are speaking about, there is this investment there or there is that investment. It helps you remain focused. So in this video, I would help you reflect on this question by speaking about 3 types of investors. Stay with me. Hello and welcome to Diaspora Careers and Investments. If you are new on this channel, my name is Shadrach, and on this channel I speak all about making money, managing your money, and multiplying your money. In today's video, I reflect on the 3 types of investors to help you decide what kind of investor you are and know what kind of investment package is suited to you. But first, let me tell you about my own investment journey. You see, I trained as a nurse, and for a long time I did not invest because I felt I did not have enough technical knowledge. In fact, I thought I did not have enough money to invest. But what if I told you that already you may be investing even without knowing? Because you see, when you put your money in a bank or you save your money in the bank, whether Barclays Bank or HSBC, the money is actually being invested elsewhere even without your consent. Because I'm sure you know that the money you gave to the bank is not sitting in a vault in London or Edinburgh waiting for you to come for it. In fact, that money is being invested whether in a company or given as a loan to an individual or a company to work with it. And based on the profits they make, they pay you a meager interest on it. So instead of making the bank invest the money for you, why don't you invest the money yourself? And I'll help you with, come along this journey with me to know how you can do this safely. But first, let's start with the conservative investor. The conservative investor is somebody who doesn't want to risk losing money at all. And this is the kind of person that I used to be. I enjoyed seeing my money grow in the bank, well, or so I thought, rather than risking it elsewhere. If that is the kind of person you are, fair enough. If so, then you want to look for high interest paying bank accounts to put your money. Because if you're not going to risk some of your money but going to keep it in a savings account, then you might as well go for the one that pays the highest interest rate. I'll put a link to some videos I've recorded on this. There are some cash ISA accounts like Moneybox that pays about 5.17% at the moment, and there are other high interest paying savings accounts you can keep your money. But know that even though you may not be investing or risking your money is actually being invested for you. Of course, it comes with the advantage that your money is protected by the bank or by the government. The FCA or the FCSC here in the UK means that your money up to £85,000 is protected. Should the bank go bust, you are guaranteed that amount of money if you save up to that amount. So that may be safe for you. The other reason why I was not investing was because I felt, what if something comes up and I need the money? I was afraid that I would invest the money, then an emergency comes up for which I do not have any money, and that I would have to then go and borrow at a higher interest rate. So I thought saving the money was the best option. Well, you'd be surprised to know that over the years that I kept my money in the bank account, nothing came up that needed all of my money. Oftentimes that there was an emergency, it was within a certain budget for which I could, get some of my money to use, and then some also remained. Which means that I could have budgeted for this, whether in an emergency fund. I could keep some of my money in a savings account and then invest the rest, because whenever an emergency came up, I had, some budget for it. So if that is your reason for not investing, then I would like to suggest to you that you can have, some of your money invested and some in a savings account. But regardless of your reason, I hope that you can move towards being a conservative investor to a moderate investor. So now let me tell you about who a moderate investor is. The moderate investor is somebody who is happy to invest some of their money. They are still afraid to take big risk, but they understand that they can gain more if they invested their money. In fact, they understand that their money is being invested by the bank and they are being paid a meager interest. So now they are happy to, step forward a bit, risk some of their own money in safe instruments like mutual funds, like ETFs, like the stock market. They understand that the market can be volatile and that they would have to wait for a while, maybe 5 years or more, in order to gain something significant. And that is the kind of investor that I like to think that I am at the moment. I've still not gotten to the point where I take big risk, but I understand that if I'm able to risk some of my money, if I'm able to invest in safe instruments, I tend to gain in the long term. For example, at the moment, my investment portfolio is performing about 16%. But many people have written to me to tell me that, Shadrach, my portfolio is performing 20% and even more. They are certainly gaining more than they would have in a bank. But still, I still warn such people that the market can be volatile. So don't put all of your life savings in there. Rather, put only a fraction that you are happy to leave for 5 or 10 years or even more. And I think that this is where I like, my friends over here to come to this journey with me, where I have moved from being a conservative investor to a moderate investor. Because I understand that my money can do better in the stock market, in a safe instrument. So I invest in things like the S&P 500, other, ETFs, which I can share with you. If you'd like to know, let me know in the comment section. Doing some of these investments ensures that your money grows in the long term. These moderate investors still understand that they are risking their money, but they are still protected by the government to a limit. And let me explain this. You see how your money in the bank is protected by the FCA for up to £85,000. Likewise, if you invest your money in a good company or in a company that is regulated by the FCA, your money up to 85,000 or even up to about £400,000 is protected by the FCA or the Financial Ombudsman Service. I'll put a link in the description box below that further explains this. Mind you, I have not said that your investment itself is protected. For example, if you invested in the S&P 500 and it performed poorly and so you lost some money, that money that you've lost is not protected. But if you were to give your money to Vanguard to invest in, say, S&P 500 and Vanguard went bust, Vanguard went missing, that money you have invested is protected. So you see that being a moderate investor still comes with some protection. Your money that is invested in the company is protected. But of course, you can protect yourself against such losses by simply going to the FCA register to see if the company that you are using is protected. I'll put a link to the FCA registry in the description box below. Do simply check it out and ensure that the company you are investing in is protected. Again, if the company was to go bust, that money is protected. But of course, if you invested in something that, performed poorly, that money itself is not protected. So it would make more sense to invest your money in a safe company and invest in instruments where you know that in the long term your money is going to yield some returns. And we know of several ETFs that have performed better in the long term. Allow me to interject this video with this special appeal. My analytics show that over 45% of those who watch this video have actually not subscribed. I know this may not be malicious, but I would really appreciate it if you take a moment to like this video so that we can reach a lot more people. But if you've not subscribed to this channel, I would greatly appreciate it if you can actually click the subscribe button. Thank you. Then we move to the final investor, who I like to call the risky investor or even the aggressive investor. These are people who understand that, the joy is in taking the bigger risk. So they don't mind losing their money or they don't mind taking bigger risk with the hope of gaining bigger returns. But they also understand that they can lose their money. So these kind of people tend to invest in cryptocurrency, forex, and other highly volatile instruments, like even some small company stocks and that kind of thing. You ought to understand that you risk losing all of your money. And in fact, the vast majority of people who invest in this instrument tend to lose. Very few of them actually gain. And your money is also not protected by the government. Here in the UK, there is no protection for people who invest in cryptocurrency or, in fact, these are unregulated. So you risk losing your money. I don't tend to invest in such instruments, but there are people who have such high tolerance. I don't encourage this because you cannot really plan your life based on such, such investment. One of these videos is for you to understand the kind of investors there are. It is not to box you in one particular area that, as for me, I'm a conservative investor, so I don't do, stocks, so I don't do this. It is for you to understand the kind of investors there are. And then you can actually expose yourself to either of these. So for example, I invest heavily, I save a lot of my money because I've got some short-term goals for which I need more money, immediately. But then also I invest in ETFs, index funds, and stocks. So I am a moderate investor also. Then I have, a tiny fraction of my money in the cryptocurrency. And I don't speak about this because you cannot plan your life with crypto, or I like to think so. I remember I invested about £100 in crypto market, and the money kept going down and down and down and down. But I wasn't bothered because that was money I was happy to even lose. But recently, when Bitcoin rose a bit, the money gained some traction, and then it rose again. Then once I made about £120, I sold it and took my money out. I was like, never again am I doing this. Did I learn from it? Of course I did learn from it, but I wasn't bothered if I had lost all of that money. In fact, if you'd like to know my investment portfolio, do let me know in the comment section and I can share that with you. What my investment portfolio shows me is that what fraction of my money is in the stock market, what fraction is in savings, what fraction is in the real estate, and what fraction is actually in cryptocurrency. These help me to know at any point in time what proportion of my money is exposed to which market. And that can be good because I don't want to miss out on certain things. But this is my opinion. There's no financial, advice. So you can also, do as you see pleasing, or you can seek further advice. Well, I hope this video has helped you to make, to move from being a conservative investor to at least be a medium, a moderate investor, because your money's there will be protected to a limit. But then if you like to risk more, then you can consider being a bit aggressive with some fraction of your money. Well, I hope this video has blessed you today, and until the next one, God bless.